welcome to the fourth Savings Guru podcast. I'm delighted to be joined by Colin Field today, who's CEO of the Saffron Building Society that are based across Essex and the Suffolk area and Cambridgeshire. Colin, thanks for coming on. It's good to be talking to you today.
Thanks, James, for inviting me. It's a pleasure to be part of your podcast.
Oh, thank you. Do you want to start by telling us a little bit more about the history of Saffron, how the society has got going, and kind of bring us up to where you are today?
Yeah, happy to. We've been going quite some time, actually. We're 171 years old. Originally founded back in 1849 by a reverend, probably in time with many of the building societies within the building society movement, with the intention of providing better housing for people living locally. So initially it was called the number 2 Saffron Building Society, and I don't know what the number 1 Saffron Building Society was. But we've been going for 170 years and still going strong. And clearly we've grown a bit over that period of time. But actually the goals of the society in that time haven't really changed. We're still here trying to provide housing for people and also providing a safe place for people to put their money and get some return.
I guess that's particularly given the current environment we're going through, that's probably become even more pertinent at the moment, the local relationship being on the ground.
Yeah, it's vitally important. I think what we're finding, like many others, is we are owned by our members and we work for our members, but building those strong relationships with people and building trust is going to be absolutely key. Because, as you will be more than aware, the amount of competition that we have, not just on the high street, but now online as well, means that whilst we've got to be really, really strong on the online space and over the phone, we've got to have stronger relationships with people locally. And increasingly what we're finding is, both in terms of our staff and also our members, they're just talking about the importance of community in terms of actually they want more from us than just providing, good products and a consistent service. They're also asking for us to do more. So we're having to get more embedded within the community. And that's actually quite attractive for our staff as well.
I think that's a really interesting point you've made. I'm really curious just to see how things change. There's different kind of schools of thoughts about kind of how we'll come through this coronavirus and what the world will look like going forward. Some people think we're kind of almost in a mothball and we'll come back to normal. And other people have got more extreme views that everything will fundamentally change. I think for me, there's a couple of things that I think will be really important. I think it is that community that you mentioned and is forcing businesses to digitize that haven't done already. I mean, that's something you talked a bit about the community there, but also that the digital side is something that you've worked on as well in terms of your systems and what you have in place to marry the two together.
It really is. The key thing is marrying the two, James. I think a number of people, you certainly used to say to me, there was a perceived thought that, for example, a lot of the people who'd be our normal customers, people 50 years of age and older, people would say they don't use computers, they don't use mobiles. We've been able to show now for a few years that that's not the case. Actually, digital technology is used by all of our members. All demographics use digital technology, and the key thing we have to do is to be able to offer a digital service in addition to that face-to-face personalised service. And ideally, what we want to do is kind of create the same tone, same experience digitally as people see face-to-face. And in terms of the whole horrible crisis we're going through now, I think it's going to have a huge impact. And I don't know exactly, as you were saying, James, I don't know which way this is going to go. Because what we are seeing is that people who normally would have preferred to use face-to-face services, use, for example, branch services or post services, they're now taking to digital services and mobile services, and they're getting really confident at using them. And I don't know whether, following this COVID crisis, they're going to continue to embrace or even further move towards more platform-based savings potentially, or whether they're going to actually really yearn to get back that face-to-face contact. So that's one of the things that we really need to watch, and it's going to be fascinating to see how that plays out.
I agree with you. I think for definite, some of the move to online and digital channels will stay. Whether it all does remains to be seen. But I think that community and personalisation will also be yearned for. I think people have missed it. It's whether people go back to it for a bit and then stick with it or move away. But I'm not so sure they will. My sense is that that's been quite important, that community for people during this, and I think there's been a lot of recognition of companies who have kind of behaved well during this and put their customers first through the crisis. and recognise the situation we're in. I've been really interested to see some of the things that have gone on in the mutual sector. We talked before we came on air a little bit about some of the things you've been doing in terms of contacting customers, which I think is really lovely. I hope we see some of that kind of stay going forward.
I hope so too. I think it really brings to the front of people's attention just what's important, and it really is about family, friends. I think people are becoming, more and more aware of their local communities as well, and just how important they are for them. So whereas I think the familiarity with digitisation, I think will just accelerate a trend we've seen already. I think, hopefully when we come out of this terrible crisis, I think we will have a society will have changed quite a bit, and what they expect of businesses will have changed, and the service they expect will also have changed. And I'm of course proud that my colleagues, this really fits into what they love doing. They love serving members, they love talking with members. We never try and hurry people off the phone, for example. We don't have any regard for doing that. And in fact, we've actually created a full-time role in our society, who they're responsible for looking after vulnerable customers. So what they will do is coordinate activity, and they're always in hand if we come across any of our members who's demonstrating vulnerability as well, which is especially prevalent at this time.
Is that something unique to Saffron, Colin? Because that's not something I've heard too many people say, that they've actually got somebody full time just purely looking after their vulnerable customers.
I don't know if it's unique, but it was really clear to me that we needed to have that role. The individual concerned was just so passionate about that as part of, aligned with her day job, that she basically, beat down my door and saying, look, there's a real problem out there with vulnerable people who are being taken victim of, either, generally by scams in particular. And there's been a lot of news about scams in the press over this COVID crisis. And we recognised we needed to make sure that, A, we had a point of contact, a point of excellence for people to go to if they did detect vulnerability with customers, and B, we needed somebody who could actually train that out. So now, she will spend a lot of time dealing with specific issues, but also making sure, for example, that all our staff are familiar with dementia, which is a growing problem in society, and a number of other things in there as well. So it probably isn't unique, but I think it will be increasingly prevalent in organisations like ours as we move forward.
I think that's a very commendable thing that you've done there. So that's a really nice thing to hear. We talked a little bit earlier, but you mentioned about sort of some of the challenger banks, and mutuals have kind of typically had I'd say the moral high ground versus the big banks in terms of how they look after customers, both in terms of service, but also in terms of offering them a fair deal on rates. We've obviously noticed that in more recent years, challenger banks have been the ones that have now started to occupy more of those best buy tables. But Saffron's been a bit of an exception to this. We've seen you regularly in the ISAs, bonds, business savings. Can you tell us why Saffron feels, what savers are still important to them when maybe others would feel that that's not the case?
Yeah, I think it's probably generic across the whole of the building society sector. I'd say there is we absolutely have the sense that they are our members. We serve them. It is their business. And, even given the historic low rates we're seeing now, what we always try and do is offer sustained fair value to our members. And I think, two of the elements at play there is, if you look at the large banks, and this is just the nature of their ownership structure, that they're set up for their shareholders. So they're set up to get return for shareholders. I think what really brought me towards the mutual sector is that we're not geared up that way. We're actually set up for our members. So by not having shareholders, it means we can actually generally pay better rates to members. And even when we see changes in interest rates, what we certainly do at Saffron is try and balance to make sure that, where we're losing on one side of the balance sheet, and apologies for using a technical term, we're also paying at the same amount on the other side, and we always look to be fair with regard to that. So I think the ownership structure really helps in that regard, and it certainly gives me more leeway as a CEO to be able to put the customer first in a way that maybe I wouldn't be able to do if I was in a listed bank. To go into the other element in there, I think the key thing is that if you look at the large clearing banks, certainly since the recent retail ring fencing, they have lots and lots of savings deposits already, and they don't really have the need to pay up. In fact, many of them are overly liquid, which is also driving some of the exceptionally low rates in mortgages that you currently see now. What we're doing, though, at Saffron is what you also see, and with the incoming of many challenger banks, which have really created huge competition, is they're growing and they're looking to grow their businesses quickly. And I think with technology and with people like yourselves making it clear where value is available, it means that if you want to attract funding in, then you have to pay for it. You have to pay a competitive price for it. And I think what you're seeing at Saffron is a combination of those two dynamics coming together. We look to provide value to members in the long term, but we're also trying to grow again in terms of growing our lending. And to do that, we're having to build up our balances, and clearly we have to be competitive to do that as well. So if we get it right, it becomes of benefit for both our mortgage customers and also our savings customers as well. So the secret is to try and get it right.
One area you've been, I'd say, particularly competitive. You've sat for a long while as one of the best buys is in the children's accounts category. Why are children so important to Saffron?
The main driver for us is we've looked at the research, and it shows that an adult's attitude to money is shaped sometimes as early as 7 years of age. And having pocket money and then getting into the right savings habit can be a real positive influence on them. So we really want to encourage people to develop a savings habit and to make sure that they've got money saved away just in case they come into hard times. Because, when you look at the population, I think it's about 12 million households have got hardly any savings. So we've taken the decision that the way to do that is to try and engender those kind of behaviours as earlier age as we possibly can do. And then hopefully, of course, we're going to try and hold on to those customers as they get older. Clearly there's a commercial interest in it for us. But mostly it's trying to drive those right behaviours.
I think it's really interesting what you said there about as early as 7. I think the amount of people that I speak to who still kind of bank or save with the providers that they opened up with around that age, whether that was their own interest or large leaning on from the parents or some sort of trigger like getting some money at Christmas or for a birthday. It's amazing. There's the oft quoted statistic that we tend to divorce more in the UK than we do move bank accounts. So I think it's really good that, given what you've said, but particularly that you offer such a competitive range to children. Another account that caught my eye that you've got in the pipeline is a plan to launch an EnviroSaver. Can you tell us a bit more about this and what's your thinking behind it? What's kind of prompted you to launch that?
Yeah, happy to, Jane. I'm really quite excited about this. Hopefully we'll be launching it on Friday, which is about 29th of May. One of the things we do is, and it's a real benefit of being a small to medium-sized organisation, is we listen to our customers, we listen to our staff, and it is clear that increasingly both our customers and members and staff are passionate about the climate, about the environment, and about local initiatives. And what we've done is try to harness their enthusiasm to try and support initiatives that they're passionate about. So the EnviroSaver, the main tenet of it is it's an online instant access product. And what we're asking for is that the customer will pay 0.05% or 5 basis points, as we call it, less. They will receive less than they would on the comparable normal product. And we will pay that and an additional 0.05%, which makes it 0.1% to the charity that they choose. And we've run a poll with our members, and they've chosen a charity which we're going to support for the next year. And what we're hoping is that members will see that they can help contribute, and we'll match that contribution to them, and we'll end up doing some real good in the community.
I think that's a really interesting idea. I think those sort of accounts you got called sort of loyalty community type of accounts historically, but they seem to have died a death in certainly in the last decade or so. I've seen very few other than one or two sort of exceptions. So, but that's really interesting that you've brought that back purely as a kind of green finance type play, focusing on the environment. You mentioned that you're giving members the opportunity to vote on the beneficiary of that. Have you had the results in for that, or is that still ongoing?
Yeah, we have. So for this year, we'll be supporting the Conservation Volunteers, and they operate nationally. And what they do is they coordinate activity to try and clean up, smart up and improve green spaces. So, hopefully, with this COVID crisis as well, people will recognise the benefit of being able to get in the outdoors and they coordinate a lot of activity to just improve the environment for people. So we'll be supporting that charity for the next year, and I'm really hoping it takes off. I really am, and that we can do some real good.
I can't say that I've seen anything like that in the savings market. I've seen some sort of green finance, as it's referred to in industry, initiatives on the investment side and kind of fund side, but not on the savings side. So I should be really interested to see how that goes, and I look forward to seeing the launch on Friday. We've talked quite a bit about some of the things you've done on savings. You've obviously been quite active. Do you have any other plans in your sort of savings proposition roadmap for the future that you can tell us about?
Certainly, in the savings, we're always talking to our members to find out, what they were like, and I think this is probably a good test point for us to see if this works and see if it captures the imagination. I think on the broader piece, we're very keen on the green finance initiatives as they stand anyway. So we're doing other things around there. So one of the things you'll see that we're launching a green hub, where we're going to provide information to customers and non-customers in terms of how they can save energy and also save money by making good choices. So we're looking to launch that towards the end of the week as well. And likewise as well, we're trying to launch some other mortgage products as well, which reward people for retrofitting their homes and making them more energy efficient. So, what we're doing in terms of the environmental aspect is we're constantly going to challenge ourselves in terms of what else we can do. Because I think now, there are very few people in the population, thankfully, who don't see climate change as being a real problem, a significant, probably the biggest issue that the world sees, and that we all have to play our part. And it's become a real rallying point for staff as well, because they're passionate about it. So that's broadly what we're trying to do. In terms of other savings products, it will be the case that we're going to keep trying to promote good savings habits. So we'll look towards that as well. We've currently, off air, we were talking about some of the actions we've taken to try and restrict footfall into our branches because of the COVID crisis. But what we were looking to do is, when our branches do open up again, see what else we can do to try and, for example, do more regular saver activity, and get people doing the right savings activity and building good habits.
We did talk a little bit about the branches, and you've got a network of 8. Perhaps you could sort of tell us a little bit about how you have coped with the COVID-19 impact and how that's impacted how you operate in the branches, what you've had to do differently.
I'm very pleased and proud that we've managed to keep all our branches open throughout the crisis. What we've tried to do is do whatever we can to keep our staff safe, keep our members safe, trying to restrict foot flow as opposed to trying driving people into the branch as much as possible. And I'm really, really proud of our staff, all of whom have stepped up, have come into work every single day and continue to serve customers. I think the impact it's had is we've seen fewer people coming into the branches, but we've seen more phone call activity going on, and we've been using our branches to do outbound calling to customers to help them with savings reviews, and sometimes just to call them to see how they are, which we've done in some cases as well. So for me, the incredible thing I've seen is that we've managed to keep the business within the branches working, just about as effectively as we were before, by using different channels, which I think is incredible. And I wouldn't have thought that would have been the case prior to the crisis. But perhaps, as we talked before, that really is an indicator of the way that the future will pan out as well, with people getting more familiar with using different channels.
Yeah, I agree with you. I think I saw Jess Staley of Barclays talking during the results, and one of the things that he was obviously naturally asked about was the Canary Wharf office space that they had, and his response was that we probably aren't going back to that kind of working anytime soon, and when we do, it will be significantly different to how we have. But he also interestingly talked about branches and about potentially locating some of the staff back into branches, using some of the space in there, and having staff kind of using branches as hot desk. And I thought that was a fascinating insight to his thinking. We've gone through a period where the bigger banks have obviously shut down a huge number of branches, thousands over the past decade, and whether this crisis could kind of signal a bit of a revival as people get kind of used to that community support that the branch network provides.
I think it's a real opportunity for businesses to really think through how they can support their customers' financial health and the role of the branch in doing that. And I think historically, I can only talk for Saffron, what our vision is in terms of how can we turn our branches into hubs where people could, or build or into branches where people can come into and they know they can get trusted advice. So that's what I think we're going to have to move towards, and what we should move towards. In terms of use of space, absolutely. We went overnight on the 23rd of March from being centred in Saffron Walden, where we're based, to overnight having about 80 people working remotely, dialing in, using video conferencing, and working from their homes. Quite extraordinary. And I can see I agree with Jess Daly that we're not going to move back very quickly to the way things were, and we're probably not going to move there at all. So we're actually rethinking the way that we do things at Saffron as well. And I think the second thing there is, I think staff's expectations have changed as well. In terms of people who historically would really have wanted the freedom to go and work more remotely and have more flexibility, have now demonstrated they can do that and they can work highly effectively. And I think those managers who probably were less keen on people working remotely because they weren't sure what they were doing, I think they recognise now that now people can be just as productive and even more productive by working remotely as well. So there's a number of dynamics at play there. And then the final piece, though, is just recognising that people are social animals. And as much as what I'm seeing is that we're working highly effectively remotely, there is still that human interaction that you get in the workforce that you can't do as well over video conference. So whether it be using branches or whether it be configuring office spaces completely differently, I think that's probably the future that we'll be moving back to, and certainly not the future, not where we've come from in the past.
I think obviously this has all been an awful situation for the country, but I think I'm somebody who would consider myself a natural optimist, and you're looking for what might be the good that comes of that situation, and I think this is one where I can really see some positive benefits, that we make some real change in how we work and how we interact with each other going forward, and some real societal benefits to come out of that. I hope. I agree with you. I don't think we are going back to where we were. The bit is what degree of change do we see? What amount sticks, if you like, going forward? Where we end up settling as our new normal, as it seems to be getting referred to. One thing I always ask every guest on the show, so you can't escape this one, I'm afraid, either, is if you were Chancellor for the day, and obviously Rishi's been a pretty busy man recently, and savings probably not been at the forefront of his mind. But what would be the one change that you would make that would benefit savers if you were in charge of the Treasury?
Well, thank you, James, for asking me that question. Yeah, I'd imagine Rishi's quite busy at the minute, and I don't think too many people would probably want to have his job, because
no,
it's a bit of a poison chalice. I think the obvious thing to say is the Chancellor no longer has authority to change interest rates. So the obvious thing for any saver would say, well, I want to have higher interest rates. What I would do, and I think he should really look at, or if I'm Chancellor, I would look at, I should say, is how do we create more incentives in the tax system for individuals to build up a basic level of savings that would protect them from any shock? And my view on that would be, why not, in the same way that pensions are tax deductible and paid directly from businesses, why don't we create instead a payroll savings scheme, which would allow an individual to save, say, a couple of £1,000 tax free, which would mean that they'd have money set aside in the case of a shock coming their way. And as I said before, one of the things I'm really concerned about is that the number of people who have no savings, and if they have any issues with their, it could be the washing machine, could be the car, something going wrong that they have to go and fix, they have no means other than high cost lending to go and get the money to go and fund that. So what I would do is I'd create an incentive in the tax system to try and help people build up that degree of safety.
I like that idea, Colin. I think that's a really interesting take on it. I think we've seen a few kind of plays from the government over the years. Obviously, initially starting with kind of the ISAs, and more recently we've had the personal savings allowance and the help to save, trying to target people to get exactly that kind of emergency kind of fund you talked about. Trying to get people saving up to £600 a year, which then gets a bonus, a significant bonus from the government, but payroll saving isn't something that's been looked at. They've got there eventually with auto enrolment, with pensions. I think that whole space will ultimately get looked at. I suspect that it hasn't done in more recent times because of the political upheaval we've had with the leaving the European Union and general election and now COVID. But I suspect that that will rise higher up the list when the dust settles on this and the government kind of realises and looks back and sees just how many households are. I've seen numbers like you quoted 12 million there, and that's I've seen numbers between 9 and sort of 12, 13 million quoted. That's a lot of people not having that kind of basic safety net, as you said, to be able to cope, and then having to go to sort of some of the more extreme forms of lending to survive when they get a jolt. I hope I like that idea. I hope that's an area of reform that does get looked at once we're through the worst of this. We've obviously seen a huge amount of changes over the last few years in the savings market, which we just talked about. What changes do you think we're going to see in the future over the next few years, Colin?
I think we'll see a number of changes, and probably some accelerations of what we've seen already. I think certainly with the coronavirus experience and more people getting more familiar with digital channels, I think we're going to see people being open to using more digital channels. I think we're going to see people open to more switching going on. People will be far more keen to understand actually the options that they face. So that's going to be great for the consumer over a period of time. I think it also means that we're going to have to see a number of institutions change the way that they service customers as well, which it'll be interesting to see how they can actually respond to that too. I think what we'll also, or I hope we see as well, is that, given again the crisis that we're in now, people will really start to consider their future financial health very seriously, and they'll really start to think about potentially saving more. Over the last 5 years, we've seen the general savings rate in the UK being as low as it ever has been, around about 5 to 6%. So it would be good if we started to see that. And of course, the real challenging thing, I guess, to see, which I think you raised in one of your blog posts, was actually what's going to happen with interest rates. Because I think certainly over the near term, I don't think we're going to see savings rates that are going to make savers feel particularly more pleased about what they're receiving from institutions as well.
I think it's really interesting what you say in terms of the crisis, and I think we've kind of probably had a lot of people now see the value of having a pot of emergency savings for scenarios like this, if not to cover all the way through, but just the value of having something there, a safety net of some description. And I really hope you're right. I hope we do see a kind of resetting there once we've recovered from the shock of this, that people kind of value that safety net and that we can help more people get that in place as an industry. Colin, I think that probably brings things to an end. I think we've covered some really great stuff there. It's been really interesting episode to record. Thank you ever so much for joining us. It's been a pleasure to talk to you, and I look forward to continuing watching the Saffron go from strength to strength.
Thank you very much, James.
Thanks, Colin.